day. This is Midshipman Miguel Alvin L. And I'm going to report stock. Stock. The goods or merchandise kept on the premises of a business or warehouse and available for sale or distribution. The capital raised by a business or corporation through the issue and subscription of shares. Type of stocks. Growth stocks. These are the shares you buy for capital growth rather than dividends growth. Stocks are essentially shares in those companies that are generating positive cash flows and whose earnings are expected to grow at an above average rate relative to the market. When you say growth stocks, it has a higher growth rate. It generates earnings rapidly. Growth stocks tends to show a significantly higher growth rate than the average market growth rate. It is because growth companies are growing at a very fast pace and hence typically wants to reinvest their retained earnings back into the company to boost the revenue generating capacity of the business. Growth companies usually demonstrates a significantly higher growth rate because they tend to possess some kind of competitive advantage over other companies in the same industry. The competitive advantage gives growth companies a unique selling propositions which helps them sell and grow better than other companies within the same industry. Yield stocks ideally are those that perform well in bull markets while providing partial downside protections for investors in bear markets. They are the stocks of choice for the incoming seeking investors. When you say yield stocks, it is the stocks which usually divided to the investors who wants to manifest money in a bull markets. An example of a bull market is when everyone is buying stocks because prices are up approximately 20% and rising. Next is defensive stocks, also known as non-cyclical stocks. These are the shares that don't go down so much when times are tough because they sell consumer staples. Typically, these types of stocks provide a constant dividends and report stable earnings regardless of the state of share market as a whole. On my own understanding, when you say defensive stocks or non-cyclical stocks, ito usually sila yung may stable na earnings but it depends on the situation. Sila yung may concept demand usually nagbababa sila ng demand pag tumataas yung supply, pero pag bumababa naman yung supply nagtataas sila ng demand. The example of this is utilities, foods, water, gas, oil, and etc. But it tends to be more suitable during the various phases of the business cycle. The top 5 benefits of stock investing. Takes advantage of a growing economy. Number 1. As the economy grows, so do corporate earnings. That because economic growth creates jobs, which creates income, which creates sales. Number 2, stay ahead of inflation. When you say inflation, when money supply exceeds available goods and services, it generally price level of a product increases. So, for example, when the supply goes down, the demand will get higher. Number 3, easy to buy. The stocks makes it easy to buy shares of companies. You can purchase them through a broker, a financial planner, or online. Once you've set up an account, you can buy stocks in minutes. Number 4, make money in 2 ways. Most investors intend to buy low and then sell high. They invest in fast-growing companies that appreciate in value that's attract to both day traders and buy and holder investors. The first group hopes to take advantage of short-term trends while the latter expect to see the company's earnings and stock price grow over time. They both believe their stock picking skills allows them to outperform the market. Other investors prefer a regular stream of cash. They purchase stocks of companies that pay dividends. Those companies grow at a moderate rate. And lastly, easy to sell. And probably it is easy to sell. The stock market, it allows you to sell your stock at any time. And the top three disadvantage of stock investing. Number one is risk. You could lose your time entire investments if a company does poorly. Investors will sell, sending the stocks price plummeting. When you sell, you will lose your initial investment. If you can't afford to lose your initial investments, then you should buy bonds. Number two is stockholder paid last. Stockholder and bondholders, creditors get paid first if a company goes broke, but this happen only if a company goes bankrupt. Last is time. If buying stocks on your own, you must research each company to determine how profitable you think it will be before you buy its stocks. 10 steps to invest in stocks. Number one is determine your goal. Before you get into investing of any kind, you first have to make sure that your overall financial situation is in a position to accommodate the new activity. Your financial baggage includes everything from income to debt to your household budget. Step 2. Put some money to side. Put some money to the side. Before you put any of your money at risk, you should first have some put away that will not be subject to any risk and whatsoever. Step 3. Open a retirement account. Once you have a well-stocked emergency fund set up, the best place to begin investing is in retirement account. Step number 4. Start investing with a low-cost online service. Once you have a retirement account up and running it's time to start investing for your non-retirement investing needs. And step 5, begin with mutual funds or exchange traded funds or ETFs. When you begin investing, you'll be far better off with mutual funds and ETF than plunging right into stocks. Funds are professionally managed and this will remove the burden of stock selection from your plate. All you need to do is determine how much money you want to put into a given fund or a group fund, and then you're free to get on with the rest of your life. Step 6. Stay with index funds. To make mutual funds investing even more hassle-free, stick with index funds. For example, index funds that track the Standard and Poor 500 index are invested in the broad market, so your investment performance will track that index precisely. While you'll never outperform the market in an index fund, you'll never underperform it either. As a new investor, this is at it should be. And number 7, use peso cost averaging. Peso cost averaging is the process of buying into your investments positions gradually rather than all at once. For example, rather than investing 200,000 pesos in a single index fund, you can make periodic contributions of say 5,000 pesos per month into the fund. By doing this, you remove the possibility of buying at the top of the market. Instead, you're buying into the fund at all different times and continuously. Number 8, step 8, get some investment education. We could have made this step number 3 with the intention that you have some understanding of investing before doing anything at all. Fortunately, Mutual funds and exchange traded funds with the help of index funds and peso cost averaging remove the necessity. You can begin investing immediately even if you're a novice. Step number 9. Invest in individual. Invest in individual stocks gradually. When you finally feel comfortable enough to begin investing in stocks, be sure that you do it gradually. You generally don't have the peso cost averaging future when investing in individual stocks. So, you'll have to develop your method for doing this on a gradual basis. And lastly, step number 10, don't forget to diversify. If you have set up a cash reserve and a retirement plan and a investment account and have begun stocking the retirement and investment accounts with mutual funds and ETF, you've already taken a huge steps toward diversifying your portfolio. And that's all. Thank you for listening. I am Miship San Miguel.